We're doing the marginal costing MCQ. Let's go ahead. Read the question.
A company's reported profit for the year is the same whether it uses marginal costing or absorption costing. Which statement is correct?
Okay, now just tell me one thing. Uh, Profit in marginal costing and absorption costing can be different only because of one thing. What is that one thing?
I don't know.
So the profit in marginal costing and absorption costing could be different only because of one thing. Profit in marginal costing and absorption costing. It will be different only because of one thing, and that one thing is closing inventory.
Okay.
Okay, the reason behind it is that marginal costing values closing inventory at variable cost, and absorption costing values closing inventory at the total cost. So their profits can be different only because of the closing inventory.
Yeah.
Okay, now they are asking us the reported profit is the same whether it is using marginal costing or whether it is using absorption costing. The profit is remaining the same whether you are using marginal or you're using absorption. So selling cost has nothing to do with the profits. If inventory will increase, the profit will increase as per absorption costing.
Yeah.
Okay, so that means their profits are remaining the same. So can it mean that their inventory has remained the same? That is why the profits has not changed.
Yeah.
Okay, so the option answer is D. Come on, next one. As production falls, which profit will fall? Which what will happen? Which cost will reduce?
If production falls, total variable cost per unit. The unit will
Variable
remain
cost
the
per
same.
unit.
Per unit remains the same. So it will be total variable cost.
So the total variable cost will fall.
Yeah.
Next one.
A company has the following information. What is the company's contribution to sales ratio? So you will
Okay.
make
So,
a statement.
how do you find the contribution to sales ratio?
First,
Sales
you'll the
minus
contribute.
variable cost will give you contribution minus fixed costs will give you your profit.
Profit. But you don't need profit. Eh?
Yeah, you don't need profit. You know your sales per unit.
Yeah. Not you can calculate per unit. You do
6
600,000.
divided by 20,000.
Yeah,
So
divided by
30 per
20.
unit.
Yeah.
Total fixed cost is 80,000. This is 600,000. Total cost is 200,000. From your total cost, when you will minus your fixed costs, will you get your variable cost?
Yeah, you'll get 20,000. 120,000.
120,000. You got your variable cost.
Yeah.
Variable cost is 120,000. So 120,000 divided by 20,000. 6 is your variable cost.
Yeah.
Contribution is how much?
24.
So contribution to sales ratio will be 24 divided by 30 into 100. So 24 divided by 30 into 100. So
If
contribution
you
to...
if
Yeah, tell
you
me.
didn't convert each of these into per unit, would you still get the same answer?
Yes, you can check 600,000 minus 120,000.
Yeah, and then You get the same thing only way.
480.
Yeah, same
480,000 divided by 600,000 into 100.
80% of it.
Option D.
Yep.
Next one. Company forecasts that in July its sales volume will decrease by 10% and contribution per unit will decrease by 5% compared to June. So in June, it had sold units how much? 50,000 units.
Hmm.
So in July, it will sell how many units? 50,000 into 90%, 45,000 units.
Why 90 will be 10%.
Line by 10%.
Yeah.
Total contribution in June was 80,000. So you have sales minus variable cost. You have total contribution. How much? 80,000
50,000 in fixed cost
minus
of
the fixed costs 2,000. So you will have profit of how much? 78,000 in June.
Hmm.
But in July, your fixed cost will remain the same. That's what they're saying.
Yeah.
Yeah, they are
Yeah.
asking you how much will your profit fall in July?
So we'll
Okay,
calculate. Yeah.
now
So
look
it's
here.
a, yeah.
Contribution per unit. I have 80,000 is my total contribution, right?
Yeah.
So contribution per unit is how much?
Contribution per unit for the first
June.
thing.
Yeah, June.
80,000 divided by 50,000.
So contribution per unit is 1.6.
That's it. Yeah.
And they are saying the contribution per unit is also contribution will also decline by 5%.
Hmm.
So can I say 95% of 1.6 will
Into,
be the new contribution per unit?
hmm.
So 1.6 into 95%. 1.52 will be my new contribution per unit.
Yeah.
So what will be my total contribution?
76,000.
45,000 units I am selling.
Hmm.
So 1.52 into 45,000 will give me my new contribution.
Yeah.
So my new contribution will be 68,400.
Hmm.
Yeah. Fixed cost will
Yeah.
remain the same.
Hmm.
Minus 2,000. So this will become 66,400.
Yeah. And then 66,400.
So by how much will the profit fall in July? Minus 78,000. So the profit will fall by 11,600. Yes.
Yeah.
What did I do? Can you tell me?
Yeah. So you, right now you subtracted both of them to find
Okay,
the
but
difference.
overall, what did I do?
Okay, so first so you wrote June ka everything 50,000 and then you did 50,000 into 90% to find the July ka sales. Then the contribution of June was given as 80,000 and fixed cost is same for both June and July 2,000.
Hmm.
So given that there's a 5% difference, there's a decline in the contribution per unit. So we
Hmm.
found contribution per unit and we did that into 95% to find the new contribution. And that you did into 48,000 units. So you got
45,000.
68,400. Yeah, sorry, 45,000 units. And then you did 68,400 minus 2,000, which gave you the new profit. You subtracted the whole profit from that and you
We
got the
wanted the fall in the profit in July. Come on,
Hmm.
the sixth one. Which statement about negative margin of safety is correct? What is margin of safety?
Margin of safety is total units sold minus break even and units.
So the extra units that you are selling over and above your
Hmm.
break even.
Hmm.
Okay. If you have a positive margin of safety, that means you are selling extra units.
Hmm.
But if you have a negative margin of safety, means what?
You're selling less than you should.
So that means if you're having a negative margin of safety, your sales are less than your break even units.
Yeah.
So which statement is correct?
Sales are less than break even point.
B.
Yeah.
Come on. Seventh one. Read the question.
A manufacturing business has provided the following information about a product. What is variable cost per unit?
Okay, you
So
need to
you
know
find
variable cost per unit. So how do you
the,
find the variable cost included in the total cost?
you'll find the difference between both of these things.
Difference in cost minus upon difference in unit.
Units.
You will get the variable cost included in total cost.
Hmm.
So what is difference in cost?
16,500.
16,500. What is difference in unit? 14,000 minus 8,006. So what is the variable cost included in the total cost?
16,500 divided by 6,000. Now you do. So it will be 2.75.
So this is the variable cost included in the total cost. Next one,
So you'll do.
you got the seventh one, right?
Okay, so this was the final answer, 2.75.
Yeah, variable cost. They wanted variable cost per unit.
Okay, okay. And in the last question, they had asked us fixed cost, no?
Yeah.
Okay.
Now eighth one.
A company calculates its profit using marginal costing as 90,000 for a month. Opening inventory was 4,000 units and closing inventory was 6,000 units. The fixed production overhead absorption rate is 20% to $20 per unit. What is the profit under absorption costing?
They want profit under absorption costing. Now under marginal costing, you do sales minus variable costs will give you contribution minus fixed cost will give you profit. Okay. But they want profit under absorption costing. Absorption costing, you have profit 90,000 under marginal costing, right?
Yeah.
Okay, fine. Under absorption costing, we do normally sales minus cost of sales. Cost of sales is how much? Or you can say the difference in profit between marginal costing and absorption costing is only because of the closing inventory. Okay. In absorption costing, you value your closing inventory at total cost.
Hmm.
That is variable plus fixed costs. So the difference will be in marginal costing, variable cost, you value your closing inventory at. But in absorption costing, you add the fixed cost also in the valuation of closing inventory.
Hmm.
So the fixed cost is how much? Fixed cost is 20
Per unit.
per
No, yeah,
unit.
per unit.
So 6,000 into 20 is how much?
Hmm. It is 120,000.
1,20,000. They want profit under absorption costing. Now come on, let's find profit under marginal costing first. Because we don't have anything as option 120,000. Are you with me?
Yeah.
Okay, fine. Now sales. Do I have sales?
Sales you don't have.
Opening
But
inventory was 4,000, closing inventory was 6,000. So can you tell me how much is the number of units that you have sold? That also I don't know.
yeah, that was true.
Try to figure out. Profit as per marginal costing is 90,000.
Hmm.
Okay. Now, just look over here. In closing inventory, how much of fixed cost is included? 120,000. Yeah.
Yeah. Hmm.
In opening inventory, how much of fixed cost is included?
$20.
20 into
Into 20 into
4,000. 80,000.
4,000.
80,000. Yeah.
Yeah.
So, profit as per marginal costing would be less when you compare to profit as per absorption costing because of the fixed element.
Yeah.
So 90,000 plus 120,000 should be that because of the fixed cost included in the closing inventory 210,000.
Hmm.
So 90,000 plus the fixed cost included in the closing inventory is 120,000. So
Hmm.
it becomes 210. But I will also minus the fixed cost that is included in the opening inventory, that is 80,000.
Hmm.
So my new profit will be 130,000. Let's make it more clearer.
Yeah.
What is your profit as per marginal costing?
90,000 per month.
This profit will be different because if you want to reach from profit as per marginal costing to profit as per absorption costing, you have to include the fixed cost. You have to add the fixed cost included in closing inventory because closing inventory is treated as income, so profit will increase.
Hmm.
So what is the fixed cost that is included in the closing inventory? 6,000 units into 20 for the fixed cost.
1,20,000.
But opening inventory is treated as an expense, so you will minus the fixed cost included in opening inventory.
Hmm.
So what is the fixed cost included in opening inventory? 4,000 into 20, that is 80,000. So you will get profit as per absorption costing 90,000 plus 120,000 minus 80. With me?
Yeah. 1,30,000. Got it.
Let's go to the next one. Ninth one. Contribution to sales ratio. Sales minus variable cost. Contribution is 16.
Hmm.
Contribution to sales ratio will be 16 by 30 into 100.
100. 53.33.
Okay.
Yep.
Next one. In which order you should make the products to achieve maximum profit? Did she give you limiting factor?
No.
Okay, fine. Same material is used to make all the three products. Yeah, that means you have to make product X, product Y, product Z, and you have to use the same material to make all the three products, and there is shortage of material. So in which order you should make the product to achieve maximum profit? So basically, when there is shortage of material, material is called your limiting factor. What is material called?
Material. Wait. What is
There is
material called?
shortage of material. See, there is shortage of material.
Yeah.
So they are telling that you have less material. And you have product X, product Y, and product Z. So in which order you should make the products so that you get the maximum profit? So in this case, material is called your limiting factor. What is material? Limiting factor, because there is
Limiting
shortage of material. So what do? You find the contribution per limiting factor. Okay. So sales minus material cost will give you the contribution per limiting factor. So 40 minus 18 will give you contribution per limiting factor 22.
Yeah.
Okay.
Hmm.
Now 48 minus 24. 24. Yeah.
48 minus 24. So it will be 24.
Yeah. And 72 minus 30. 42. So which product is giving you highest contribution per limiting factor?
Product Z.
Product Z. So that product should be produced first.
Yeah.
Second
And
will
then
be
second
product
will be
Y,
product Y.
and third will be
Okay.
product Z. So
Product
option
X.
X. Yeah. So you will produce in the order of Z, Y, X. Are you with me? Option D. Can I go to the next one?
Yes, yes.
Last month, the company made and sold 10,000 units and earned a contribution of 20 per unit. So contribution minus fixed costs gives you profit, right?
Yeah.
Contribution is 20 per unit into 10,000. Your total contribution will become how much? 200,000. Its final profit after deducting fixed cost is 120,000. So can you tell me the fixed cost?
Cost is going to be 80,000.
80,000. This is figures for which month? This is figures for the last month, right?
Yeah.
This month, the sales has increased by 20% and contribution per unit increased by 5%. So this month, contribution per unit has increased by 5%. So contribution per unit will be 105% of 20. So what is the new contribution?
105% of 20, na?
Yeah.
So 21.
21. Sales volume increased by 20%. So the new sales volume is 120% of 10,000. So it will be how much? 12,000 units.
Yeah.
Okay.
Yeah.
120% of 10,000.
Hmm.
So total contribution will be how much? 12,000 units into 21.
Hmm.
So total contribution will be how much?
252,000.
252,000. Total fixed cost has increased by 15%. So what will be the new fixed cost?
60,000 into
80,000 into 115%.
92,000.
92,000. Contribution minus the new fixed cost, that is 92,000, will give you the new profit.
Hmm.
So 252,000 minus 92,000. New profit is 160,000.
Yeah, 160,000.
Option C.
Yep.
Next one. Come on, read the question.
A manufacturer has an inventory at the end of the first year of operation. What is the impact on profit if the manufacturer is considering using either marginal costing or absorption costing?
So manufacturer has inventory at the end of the year of operation. So at the end of the year, he has some inventory which is closing profit.
Hmm.
Okay. Closing
Yeah.
inventory is always treated as income. Yes.
Yeah.
Under marginal costing, your closing inventory is valued at what?
Under marginal costing, it's
Valued at only variable cost.
yeah,
Under absorption costing, your closing inventory is valued at what?
the closing.
Under absorption costing, your closing inventory is valued at variable cost plus fixed cost, that is the total cost. I'm
The
sure you
absorption.
have watched all my videos of marginal costing,
This is absorption costing also
but
together.
it has this part in it. No problem.
Okay, so
Under
absorption costing total cost and marginal costing only goes according to
variable
variable.
cost. Under marginal costing, your closing inventory is valued at
Variable cost.
variable cost. Under absorption costing, your closing inventory is valued at
Total cost.
total cost. That means under marginal costing, your closing inventory will be lower,
Yeah,
and under absorption costing, your closing inventory will be higher.
which means your profit will also be.
So under absorption costing, your profit will be higher, and under marginal costing, your profit will be lower if it is because of closing inventory.
Hmm.
So now they want to know what is the impact on profit if the manufacturer is considering using either marginal costing or absorption costing. First option, is the
No,
profit
absorption.
same?
No.
Is the profit under absorption costing higher
Yeah.
because it includes fixed overhead?
Yeah,
Yes.
it is high.
Profit under absorption costing cannot be lower, it cannot be lower. Okay,
Hmm.
next. Read the question.
Okay. A business provided the following information about a product. Budgeted production and sales were 1,200 units. What was the profit made for actual production and sales of 1,500 units?
Okay, fine. Budgeted production is 1,200. Fixed cost is always as per the budgeted production. Okay. So what would be the
Hmm.
fixed cost per unit or total fixed cost?
4.20 per unit. So you do 4.20 into 1,200.
So total fixed cost will be 5040.
5040.
Okay, fine. Now sales minus variable cost will give you contribution. What is the contribution per unit?
Sales, so 15 minus 9, which is 6. So 6 into 1,200 is 7,200.
Now, your actual production is how much? 1,500. You want to know the profit as per actual production.
Oh,
So contribution into actual production will give you your total contribution. What is your total contribution?
9,000. So Miss, want to
9,000.
do 4.20 also into 15,000?
No, because fixed cost is fixed irrespective of production.
Oh, yeah.
And it
Okay,
will
yeah.
always be as per the budgeted units.
Mm-hmm.
This is the catch. Minus fixed cost. What is the fixed cost?
5040. So 9,000 minus 5040. So it'll be 3960. B.
Okay.
Yeah.
The catch is that fixed cost is always fixed.
Hmm.
And it is as per budgeted production.
Hmm.
Go to the next one. 15th. A
15.
manufacturer has limited labor hours. Limiting factor is what?
What, Miss?
Limiting factor is what? It has limited labor hours.
Material.
So what is
Yeah.
the limited factor?
Labor hours.
What is the limited factor?
Labor hours.
Limited factor is what? The labor hours.
Limited labor hours.
Okay. Read the question and tell me which option is correct. 1 minute. Me.
So the first one is break even of each product, then profit per unit of each
See,
product,
if
and
you have a limiting factor and you want to maximize the profit, I'm repeating again. If you have a
yeah.
limiting factor and you want to maximize the profit, then you uh, find the contribution per limiting factor
Yeah, so
to maximize.
contribution,
Yeah,
yeah,
contribution per,
limiting factor. So labor hour of each product.
yes, contribution per labor hour of each product.
Hmm.
Done?
Yeah.
Next one. Contribution to
About
sales ratio. What is the contribution?
contribution will be selling price minus variable cost, which is going to be 20 minus 12.5,
7.5.
7.5. So 7.5 upon 20 into 100. So it's 37.5%.
Okay.
Hmm.
Next.
Hmm.
Company budget shows figures for cost and sales. By how much actual profit was lower than the budgeted profit?
So what was the formula that you had given for this?
For what? No, this is just about actual profits and sold. So I want to know the budgeted profit
Hmm.
and I want to know the actual profit.
Hmm.
Okay. I want to
Yeah.
know the budgeted profit and I want to know actual profit. Let's see. Sales. Volume sold is 22,000 units. This is budgeted. So what is actual sales? 10% lower than the budgeted.
So 90%.
20% of 2,000 units.
Hmm.
So 2,000 into 90%. So it is 1,800 units.
Yeah.
So here it was 2,000 units and here
Hmm.
it is 1,800 units.
Yeah.
Okay. Just multiply it with the contribution per unit. So
Then
35 minus 20. Contribution per unit is 15. So you will get
so
total contribution.
15 is for the budgeted now. So it'll be the same for both.
Contribution is the same, na? Selling price is the same, variable cost is the same. Only the fixed cost will be the thing. If they give you per unit, then you have to see, you have to multiply it with budgeted.
Okay.
So total contribution for budgeted is 30,000 and for actual is 27,000. Minus fixed costs. Fixed costs they've given you in lump sum.
Fixed cost is 10,000.
So profit